In today's video, we'll be discussing how not all income is created equal and how you can leverage certain types to create the financial leverage and the financial freedom in your life. Welcome to the Legacy Investing Show. My name is John. My partner and I discuss all things related to real estate, personal finance, and entrepreneurship. We created this channel to help you reach financial freedom and to help you along your financial journey. Like many of you, I was told from an early age that studying hard, getting good grades, going to a renowned college and getting an education, and then finding a safe, steady job will create success. Society teaches us to be a great employee, but not a great business leader or an entrepreneur. Much of society supports the notion that following instructions and procedures is the only way to find success. I'm not saying those aren't good traits to have. However, society really doesn't teach us the fundamentals of how money works. As Robert Kiyosaki puts it, society teaches us to find a safe, secure, and comfortable job. After college, I had a great finance job earning a decent income. After a while, I started to realize the trade-offs of working this job. This included not having a lot of free time, not having the right balance in my life, and always being stuck to the workplace. It sapped me of my energy, and anytime I was able to travel or spend time away from work was still always on my mind. I was still checking work emails to ensure that I wasn't missing any urgent emails that I should be responding to. When I wasn't actively monitoring my emails, I was so fearful of how many emails I'd return to at work the next Monday. You can see how this might affect someone's quality of life, right? Clearly, something was missing in my life, and I had to figure out what that was. I asked myself, what does it take to be financially free, successful, happy, and just fulfilled in life? Earning a decent income will ultimately not buy you time, happiness, and health. It also won't save you from career burnout. Earning a lot of money, however, can earn you external satisfaction, such as buying the car or the house that you've always dreamed of, or going on the vacations that you've always dreamed of with your family. It also allows you to go out to the hot spots in town. Earning a high salary and saving a lot of that income can do a lot of the things, however. But never forget that when you're tied to a traditional job, you're trading time for dollars. The next time you receive a promotion, sure, it might give you a pay bump, but think to yourself, how much more time commitment and energy are you going to be expending in your new role? After all, if you're striving for financial freedom and independence, you should know by now that time is the most valuable asset that you have. If you're not born to a large inheritance or have access to a trust fund, you will need to sacrifice time for money to build that capital early on so that you can start investing. All things worth having take some amount of time, whether we like it or not. There are always two things in life that you can't take back. One is time, and the other is the words that you say. So be very mindful of where your time is going. Early on, when I was earning a decent salary, one of the biggest and most valuable lessons that I learned was the concept of trading time for dollars. What it didn't teach me was how to responsibly manage what I earned and then reinvest that capital towards investments. It could have set me up for a much solid foundation much earlier on in my life. Thankfully, I did learn that concept later on in my life, because as you know, the longer term investing horizon that you have, the more time it takes for your money to grow. Now let's delve into the 4 income quadrants. Robert Kiyosaki, the author of several Rich Dad Finance books, outlines this in many of his books. Number 1 is the employee. The majority of us are in this quadrant. As I mentioned before, I started out in this quadrant as well. Employees receive what's called earned income from a W-2 job, whether that's a salary, hourly wages, bonuses and tips, etc. The biggest downsides in this quadrant are you're essentially trading time for dollars. It's as simple as if you don't work, you don't make any money. Sure, you might have paid time off for PTO, but that's in a separate bank and that can easily be depleted. If you lose your job, what happens to that income? It's gone and you have to find another job to continue that income stream. The second downside to this income quadrant is that it's the most heavily taxed. Earnings on this type of income are taxed on a graduated income scale, as you know. This means that the more money you make, the more taxes that you'll end up paying. Sure, you might have more money in your pocket at the end of the day, but the percentage of that income is taxed in greater proportion. As an employee, you work hours for a pre-tax income. Then the government takes a percentage of that income because we all know Uncle Sam needs his portion first. You then live with what's left, and that's called your net wages or the paycheck that you receive. In my experience, the best part about having a job was for the work experience and how larger enterprises systematized their processes. And keep in mind that when you're applying for any type of loan, including mortgages, banks tend to look at this type of income the most favorably. This means that if your financials are in line, such as your credit score, as well as your debt to income ratio, you'll have a much easier time getting financing. To become truly financially free, you want to strive to get out of this quadrant and into the next ones that I'll be talking about. The number 2 income quadrant is the self-employed quadrant. This quadrant is slightly better than being an employee because now you own your job. This means that you can conduct business however you wish. You can choose your own hours, you can choose who to hire, and generally you have a little bit more personal and financial freedom. However, as you know, it comes with more responsibilities. This quadrant is made up of many different professions, including doctors, lawyers, accountants, consultants, contractors, and massage therapists, as well as small business owners. Keep in mind that you're still trading time for dollars in this quadrant. For instance, if a massage therapist stops giving treatments or a contractor doesn't finish a project, he's not going to be paid. Since you are running a small business, you have to ensure that you're actually earning a profit. You'll need to maximize marketing and business flow, ensure that you're tracking expenses, and just have a great online presence for the services that you're offering. The only ways that you can increase your profit is by working more hours or increasing the value of your services. Keep in mind that consumers purchasing your services have to justify that expense. Depending on the structure of how you set up your business entity, you may be able to lessen your self-employment taxes. Consult your attorney or CPA to ensure that it's structured properly. To recap, this is better than being an employee, but you still are trading time for dollars, even though you have a little bit more personal and financial freedom. As I head into these last two quadrants, these are the last two quadrants that you should be striving towards. The number 3 income quadrant is the business owner. Business owners typically own large enterprises or corporations that can sustain payrolls and hire employees to carry out the vision and standards of the company. Generally, the revenues that it generates can sustain all payrolls, business operational expenses, and any capex, and still leave the owner with a profit. The most important aspect that you should have gotten is that the business owner owns a system that makes them money. You aren't necessarily trading time for money anymore. Think of franchises like McDonald's or Chick-fil-A. The business owners that own those companies generally don't have to be there all the time. This quadrant and the next quadrant that I'll be talking about are the most tax-advantaged quadrants. Unlike the employee, where their gross wages are taxed and then they have to live with what's left over, business income works totally opposite. Business net income is taxed after all business expenses are accounted for. The federal corporate tax rate is a flat 21%, and then state income tax varies state to state. Remember that earned income, such as having a W-2 job, is taxed on a graduated income schedule. The ultimate goal of the business owner is to funnel as much of your profits into the last quadrant, which is investor category. Lastly, and most importantly, the 4th quadrant is the investor. This quadrant is where money starts working for you and you're not really trading time for money. Whereas a business owner owns systems, the investor owns passive streams of income. As you build up your investment capital, this is the final landing spot where you should be putting most of your capital to work for you. There are plenty of ways to leverage your investing capital in this quadrant. For instance, the investor owns equity such as stocks, bonds, mutual funds, as well as real estate, notes, commodities, and lately cryptocurrency. As you know, my main method of passive income is through real estate investing. I leverage my expanding portfolio by leveraging bank financing so that I can keep expanding my real estate portfolio and increase my passive streams of income. I know that as long as my assets are managed properly, my passive income streams will continue in perpetuity. Ultimately, this quadrant and the business owner quadrant are where you're focusing more of your time and energy into producing passive streams of income and not just merely working for a paycheck. This is a very important and radical mindset shift because we're taught early on that we must work for a paycheck and have a safe, steady job. Now that we've discussed the 4 income quadrants and the characteristics of each, we need to delve deeper into how you can get into the last 2 quadrants, the business owner and the investor quadrants. First, analyze all of your income and write them down. Categorize them into earned income, business income, and passive income streams. Be intentional about what types of income streams you want to focus on this next year, whether that's shifting more of your earned income into business income or vice versa, shifting more of your earned income into passive income streams. Remember, the whole goal is to convert as much of your earned income into passive income streams so that you're not spending time for dollars. Always remember that as you move more of your earned income into more passive income streams such as business income and passive income, you're moving your money into more tax advantage quadrants. One thing that I'll say to keep in mind is that types of income, such as the quadrants, is different than streams of income. The reason why this is important is because as we strive to get into the 2 income quadrants, which is a business income and investor income, there are many different streams of income within each that you can strive for. The statistics show that the average millionaire has 7 different income streams. They continually work to nurture and diversify those income streams so that if one is affected, it doesn't impact the entire portfolio. There are plenty of fears that you may be experiencing as you're pushing through this radical investing journey, but keep in mind the positives. The more you can channel your focus on the positives, such as, why am I trading my time for dollars? And more into asking yourself, time is finite, what can I do to maximize it? The more you can focus on how to create the life that you truly want. Here's a quote that stuck with me as I've pushed forward into my radical investing journey. If you don't pay the price of discipline today, you'll pay for the price of regret later. Regret is the opportunity to do something, but you didn't take action to do that. you later find out how successful you could have been had you taken those actions. Keep that nugget in mind as you keep pushing forward. If you haven't already, make sure that you're following us on Instagram and TikTok. We're active there daily and answering your questions. And check out this playlist that we created on how investors can fast track their road to financial independence. Thank you for watching, and we'll see you again soon.